The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade. Well, before we get into the charts, let's take a look at what traders are watching. The fragile ceasefire is holding in the Middle East, but President Trump saying peace talks with Iran are also promising. The ceasefire brokered by the president does appear to be holding for now. Meanwhile, China, in Hong Kong, stocks have risen as the Middle East truce lifts sentiment. Mainland stocks there and also in Hong Kong are edging higher as global sentiment improved following that ceasefire. Also, the prospect potentially of a rate cut from the Federal Reserve being on the horizon. And in New York, Andrew Cuomo, the former governor, conceding at the Democratic mayoral race there to lawmaker Zoran Mamdani in the Democratic primary, setting up the 33-year-old Democratic Socialist to win the party's nomination. Well, let's get into the charts now. And Juliet caught up with Violeta Todorova from Leverage Shares, who looked at the de-escalation in the Middle East, saying that could provide markets with temporary relief.
Yes, we got some encouraging news overnight, and it looks like a ceasefire talks have taken place overnight. So U.S. markets rebounded strongly, and the futures are pointing up. So it looks like we will see a temporary de-escalation of the conflict in the Middle East, and markets will take a reprieve. Also, we have talks emerging of a potential July interest rate cuts in the US, and we've seen that the futures jump to 23% probabilities of such an early cut, which of course will support the market. But nonetheless, the Federal Reserve last week signaled that more or less two interest rate cuts are coming by the end of 2025, which should support the equity market. So there are a couple of levels we are watching in. So far, support is holding, and most probably we will see the S&P 500 trying to revisit and potentially break above its key resistance of 6,147 points, which, if occurs in the near term, would signal an extension of the rally, most probably to around 6,300 points. However, I'm still expecting price action for the remainder of the year to be choppy. I'm not expecting to see massive upside. We have still a lot of uncertainties lingering around with President Trump tariffs agenda, and we are seeing signs that economic growth is slowing in the US. So I will be cautious as we are approaching the previous February highs, although I still remain positive and I see a new fresh record high being registered in the US. However, equity markets, in my view, remain elevated at current price levels, and I wouldn't be jumping too aggressively to add to existing positions from here.
All right, well, when it comes to the Australian market, Violeta, I mean, the continued power by the miners, by the index leader CBA, keeping us well supported, even though we have seen a dip in energy.
Yes, the Australian market is faring actually very, very well. A few months ago, we were talking that I'm expecting this year the Australian market to outperform US peers, and that scenario is playing out. We've seen last week that the XJO actually tried to break above its February high, and that breakout occurred on intraday basis. So we are seeing signs that momentum is building in. And if we look at the RSI indicator, we know that the RSI in strongly bullish territory, and this pullback that we've seen is likely to be short-lived and temporary, and any weakness from here is just presenting a buying opportunity. Again, on the upside, I'm still expecting to see a decisive break of the previous February highs. However, my upside target remains pretty conservative at around 8,800 points, which is decent upside from here, but I can't see the Aussie market break into substantially higher territory from here. So yes, if we see any further pullback from here, that would present buying opportunity. But as we are nearing the February highs, we are just in accumulate zone rather than buying aggressively.
All right, let's move into the commodities, Violeta, which very much drive the local market. And these hopes of a ceasefire are weighing on the crude market. But what are the technicals showing you when it comes to Brent?
Yes, we've seen elevated activity in oil markets ever since Israeli striked Iran. And although we had signs from President Donald Trump overnight that a ceasefire peace talks will emerge between Israel and Iran, and we've seen such a slump in Brent prices, I think volatility is here to remain in the near term. There is strong support arising around $63 for Brent, which is going to act as a strong buying support for the commodity. I believe we will see volatility elevated. For me, the conflict is far from over. We've seen previous episodes in the Middle East, and those conflicts can get extended for a quite long time. This current run that we've seen up to $78 in Brent was driven by fears that the Strait of Hormuz could potentially be blocked, and we've seen overnight signs from Iranian officials that this closure is still on the agenda. So while Donald Trump's speech calmed the markets and we've seen the price really selling off, the conflict, as I said, it's far from over, and I'm expecting to see further volatility in the oil market. So most probably we will see the price trading in a new range between $63.65 to around $78, which is going to support a lot of oil producers if it stays in that range.
Okay, well, let's drill into some of those. I know Karoon is on your radar.
Yes, Karoon is definitely on my radar. I know we are going to the smaller end of town, but we actually see a very good bottom formation on the chart over the past year, and I'm actually getting very, very comfortable. The previous resistance of around $72 has been broken decisively, suggesting that the 2-year downtrend of Karoon is finally over, and I'm expecting over the next 6 to 12 months to see substantially higher prices. So the stock reached overbought levels during the latest rally, and the RSI reached extremely overbought levels, which points to a potential pullback, which is aligning with the decline in Brent prices. So I'm expecting to see a retest of the previous breakout point at around 72, which for me, it's a great buying opportunity once it gets there. By that time, most probably the RSI will decline and we will see unwinding of the overbought momentum conditions. And I'm expecting to see another rally after that. So the first potential price target is revisiting the high we've seen yesterday at around $2.19. However, over the long term, I'm expecting the price to revisit last year's highs of $2.40. So there is massive upside if we get the stock at around $72.
All right, what about gold, Violeta? There's been a lot of, chatter that maybe it reached its peak even amidst all the uncertainty in the Middle East.
Yeah, I know there is a lot of talk that the peak is in. However, I don't think we've seen the record high setting. Yes, gold is definitely consolidating just below its record high of $3,500 an ounce. And most probably this consolidation will extend in the next couple of months. But I'm getting very big confidence that we will see fresh record highs in 2025, with my conservative price target being set at around $3,700 an ounce. And my confidence comes just when I compare what's happening with the silver market, which we will touch base later on. But I think the bull run in the precious metal is not over. So if we see any further pullback to its key support level of around $3,120, that is just going to act as a solid support and present buying opportunity for investors. So for me, the bull run, it's far from over yet.
All right, well, let's move into silver and maybe some stocks that you're watching as well, Violeta.
Yes, silver, I think we've seen the moment for silver to shine. We've seen massive underperformance over the past 2 years, while gold was notching higher and higher, while silver traded in very, very wide consolidation. And what we saw last month is the gold to silver ratio reaching 103 to 1, which is a very extreme ratio. So while gold prices remained in a trading range, we see that silver finally managed to break above its key resistance of around $35, which suggests that this consolidation now it's over and the next leg higher for silver has begun. To put things in perspective, the gold to silver ratio in June declined to around 92, and we've seen silver rallying so far in June 9%, while gold only managed to get higher 2%. So I think this is just the beginning. Usually the normal ratio is between 50 to 1 to 70 to 1. So there is plenty of upside for silver, even if gold stays around its current price levels. So my most conservative upside price target for the next 6 months for silver is around $40. However, I wouldn't be surprised if by the end of 2026 we see silver trading at around $50. So current price levels present excellent entry to position and buy silver ETFs or position with silver mining stocks.
Okay, we're almost out of time, but just a quick word on one of those stocks. You're looking at Andean Silver, Violeta.
Yes, I actually like very much the chart here. I believe there is very strong support arising at between 90 cents and $1, which most probably we won't see revisited. The RSI just ticked up. I'm seeing higher lows forming on the chart, and I'm expecting to see a revisit in the short term to around $1.30. I'm expecting to see key resistance level of around $1.37 being broken on the upside, which will confirm that the consolidation is over, and my longer term price target is around $1.50. So plenty of upside and very good entry we are seeing around current price levels.
Violeta Todorova, and that is the trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.